Okay, welcome to this episode of Let's Know Buffalo. My guest today is Zach Newberry, and he is a certified public accountant.
Yep.
Welcome. So as a CPA,
Yep.
what is your job and what do you do?
Yeah. So I work with clients on, I basically would be, in a basic term, anything tax, right? But a lot of my clients we take further, and we can kind of get into that a little bit more. But we do basic tax preparation, right, during tax time. But the thing that I like to do with a lot of my clients is the planning and advising through the entire year,
And
right?
that's the part I love is working with somebody not just one day a year, but whether it's monthly or quarterly, to make sure your ducks are in a row and that you're planning for your future. Like, hey, listen, you need to spend some money or do something with the business to take advantage of some of the tax breaks so that you're not giving it all to Uncle Sam.
Yeah, and that's the problem is there's a lot of CPAs, tax preparers, enrolled agents, right? They kind of, a lot of them fall under same title or same roles that, like you said, right? In March, they're like, hey, give me all your documents. They do their taxes, don't really ask you many questions, assume that all of the documents that you gave them are correct, are right.
Yep.
Do your tax return, say, here's your tax return, sign it,
Mhm.
and submit it, and I'll talk to you again in a year.
Right.
But for business owners, real estate investors, that doesn't make sense, right? You're already too late if there's any things that you want to plan for or take advantage of in the prior year. The year's already ended, so there's very few things that you can go back and do by the tax deadline that you can get any tax incentives for.
Sure.
And you've missed the chance to come up with a plan and make that tax bill as low as possible. So sitting down throughout the year, like I have some clients that are monthly, some that are once a quarter, some once a year, but we
Right.
sit down sometime during the year and say, what can we do to make that tax bill lower? What are your plans in your business, right? So we can talk about that. But then, especially on the real estate side, for real estate investors, like, what's the long-term plan, right? Are you trying to accumulate properties? Are you just doing flips, want to maintain a certain amount? The wealth building piece of it, or how can we use all these tax savings or that to build this, and are there family pieces involved? Different things like that. So it's for me, that planning and advising piece is the special part. I'd say like 90% of tax preparation a trained monkey can do, right? It's
Okay.
take documents, enter it into a tax
Sure.
software,
Yeah.
it spits it out, and it
Right.
goes into the right spots. It's what are the 10% piece, right? What did we plan for? Did we, decide to start up a retirement account? Did we pay kids? Did we do certain meetings? What business things did you have going on? All those pieces, that where are we putting in a tax return? What do we plan for that makes the difference? And you can't do that again in the March following the year.
Yeah.
You have to do that during the year. And then your tax return is just a summation of all the cool things you did during the year.
So you didn't just wake up and become a CPA,
No.
right? So what did you do in your previous life? Were you always in the field or you worked with somebody else? Because I do know outside of you being a CPA, you are an investor, both real estate as well as a lender of some sort, hard money lender. So you've got some entrepreneurial spirit in you, and just kind of curious where that comes from.
Yeah, so the CPA side of how that came about is actually my undergrad is in sports management. So I worked in sports for 5 years, moved 5 states, 5 years, did
Really?
sales, did sponsorship, worked for the Blue Jackets, the Pirates, just a few different teams. But the tough part is in sports is there's usually no more than 4 sports teams in a city.
Right.
And if you want to move up or you're moving somewhere,
Sure.
new
Yeah,
city,
yeah.
new city.
Actually, one of my wife's coworkers, I literally just had this conversation with him. He's from Washington State.
Okay.
Grew up very close to well, I think he went to college in Oregon, and worked there for a while, and then kind of bounced
Yeah.
around the country, working for different sports companies, right?
Mhm.
From I think it was Adidas and now New Era, but worked for Nike at the college.
Okay.
So, but yeah, same sort of
Yeah,
thing.
it's it's tough to find a home when you're doing that. And my intentions in being sports management is I played college baseball, so I wanted to go be a scout, right? Work my way up to be a general manager in baseball, right? That was always the dream. Just never made it to there. 2009, I moved to Columbus, worked for the Blue Jackets after they just had their best season ever at that time. They'd made the playoffs, hired a bunch of people, increase in ticket sales. Next year, they lost 18 out of 20 games in a row, like in November, and all the new hires they let go. So that was 2009, right? Wasn't the greatest
yeah.
economy at that time.
Right.
So I decided at that time I moved back home. Buffalo's home. So decided, what do I want to go back to school for, right? And accounting was one of those things that I enjoyed in sports management. Like, right, it was one of the classes you took. And I knew that if I went, especially if I went the CPA route after getting my master's, I'd never have to worry about a job again, right? Like I wouldn't be scrambling to find things. And so I decided to go that route, went back to get my master's, worked, had tuition
Are you
reimbursement.
saying you have a useful degree?
My undergrad I didn't, but yeah. So my master's degree ended up being worthwhile, and so graduated 2013, rolled into did my licensing testing almost immediately out of school. Worked in public accounting for a year and a half or so, and then left public accounting and actually was working mostly in corporate accounting for the next 10 years or so, or up until 2022. So oddly enough, through most of my career, I didn't touch taxes, right? I worked for corporations that had a whole separate tax department.
Right.
I did a lot of the financial statement piece. But on the real estate side, I had bought my first rental in 2007. It was kind of lucked into it, right? It wasn't really a rental. It was somewhere for me to live that I was going to need, and kind of lucked into it being it was a house hack that I didn't know I was house hacking when I was doing it. And so like that we can talk about that a little bit more and how those two things kind of merged. But the entrepreneurial spirit, I guess my family is all entrepreneurs. My mom has done medical billing out of her own home office since I was like 5.
Sure.
So she worked in an office.
My sister does that
with a bunch of psychologists in the area. They all kind of went to their own practices and added doctors, and so she aggregated everything at home from the multiple offices. So that was when I was like school age. So I had a mom I saw my mom was always home when I needed her to be, or to take me to games or stuff like that when I was playing sports. And my dad had a W-2 job, but on the side he also had an inventory company and auto parts. So managed a lot of that. And then oddly enough, my sister is a bookkeeper now who owns her own business. So it's like I guess all 4 of us are in entrepreneurs. I guess I never really like paid attention to it. Then it was a few years ago, we were all sitting around a table and we're like, we realized we've all
life and your job, and
we've ended up doing this.
Well, what's funny is like for a long time, even growing up, like I knew that I liked working for myself. I knew I liked working and making money, but like being an entrepreneur, like, once you get asked in school, like, what do you want to be when you grow up? And I never thought about being an entrepreneur saying it. It just happened, right? Like it was just like one day, like I became an entrepreneur, and that's just what I love to do. It was building businesses, whether it was selling and fixing laptops and computers or video games or houses or whatever it was.
Yeah.
It's just, and now it's almost an extremely trendy term, right? To be an entrepreneur.
Yeah. Everybody is, right?
Yeah.
But
like you're on social media showing your boobs. I
Yeah.
guess, right?
Yeah.
Like,
Yep.
you're making more money than me. And if you want to call yourself an entrepreneur, fine. Who am I to say?
Hey, they have a business. But yeah, so it was 2022. My goal always was the CPA route was, at the time when I went that route, was always a means to an end. Like my thought was, I'm going to hopefully go make a ton of money that'll support me being able to buy real estate and do things like that. And hopefully by like the time I'm 50, I can retire and live passively off the real estate from like the money from both. So that number, as I kept kind of building and seeing the power of real estate, that number kept getting, it was 50 and then it was 45. And so 2022, when I was not yet 40, I decided to walk away from the W-2 world, the corporate accounting position that I had at the time, and with the thoughts of I was going to live passively, right? Like just off the rentals, but also, you mentioned private investing. So those two things together were enough to replace my W-2 income that
Mhm.
I had. I had always, just through like local RIAs and that, I had maybe 10, 15 clients that I would do tax returns for through the year, that I had met through RIAs
Mhm.
and networking
That's
and
how we met.
yeah.
Yeah.
And so my background, having had real estate myself and a small business, um, when I had to do my continuing education as a CPA every year, it was, all right, what are all the things that I can do to take advantage of as a real estate investor? And so
Right.
those were always the things that I was learning. And in those RIAs, I was meeting people who were like, I'm in real estate. I can't find a CPA in the area who also invests in real estate. Yes,
Right.
they know the law, they know
Right.
the tax code, they can talk about that, but when it comes to long-term planning or options or things like that, I just don't get much feedback, right?
Yeah.
Going back to that planning and advising we talked
And
about.
that's an advantage that I have being a real estate agent and an
Yeah.
investor, right? Like I've done residential, I've done commercial. I was a business owner. I
Hmm.
own retail stores. So, and I also flip houses and I'm working with contractors and permits and all that stuff. So I really, that's again, I'm promoting myself here is the advantage that you get with going with me. I'm not just a salesperson, right?
Yeah.
I've got experience with investors, with commercial, with residential, and contractors and building and renovating, and so
Hmm.
that really helps.
Yeah. No, and so like that's I there was some who said, "Can I use you as my CPA to file taxes?" Because I want somebody who's comfortable with real estate, and because I'd been filing my own taxes, right, and doing
Yeah,
that, and knowing that tax wasn't my focus, but that that this is at least the most expertise that I can find of all the people that I've talked to in the area. So when I walked away in 2022 from corporate world, plan wasn't to kind of expand or to really go into business there, but many of my clients then were at RIAs or were there and had in conversations have found out that I had, I was no longer in the corporate world
sure.
and started asking, hey, are you taking on more clients?
Right.
And through referrals that way, locally, and then also I worked with Chris Noggle in one of his money mentor
Hmm.
programs as I got into financial education just as a contractor working with some clients and doing that. And through being part of that network, had a lot of referrals as well that I said yes enough times that I realized I'm like, all right, I have a significant client base
Yeah.
here that in the last year and a half is when I've decided, okay, I'm really going to expand this and make this a true business. It wasn't, I don't think was the intention at the start, but I originally, especially the financial education piece, was doing it because my part is I think financial education in our country is piss poor. It's
It's like
awful.
the worst.
It
It doesn't
doesn't
make
it
sense.
doesn't exist if you don't learn how to do the right things with money from
I
your
just don't.
parents.
Yeah, I just
You're
don't
just yeah
understand
yeah.
why that's not taught.
It's
And
yeah.
and I will say, growing up, blue collar family. My dad
Mhm.
was just a blue collar mechanic, and I don't say just. That's not what I meant,
Yeah.
but he was, and my mom was a homemaker, and he worked his ass off, and I will say we lived paycheck to paycheck, right?
Hmm.
There was no financial literacy. Like it was all learned
Yeah.
from outside of my house,
Yeah.
when from friends and just and then obviously the internet became a big thing, but people are creatures of habit and
Yeah.
creatures, they become what they're surrounded by.
Yeah.
And I will honestly say that, I see some of my family members and cousins and things like that falling into the same trap that
Hmm.
the rest of the family has, right? Does
Yeah.
that does that make sense? And not going after more, or not putting money
Hmm.
away, or not investing appropriately,
Yeah.
right? All right, they'll go out and buy the brand new car, but you don't even own a house yet. Like,
Yeah.
you're spending $200 a month on a cell phone, but
Hmm.
your car's falling apart,
Yeah.
right? Like, where's
Yeah,
the
but
priority,
you
right?
don't have a
Like,
place to live that you feel safe
yeah,
in or
and I
things like
just
that.
shit like
It's
that I can't wrap my mind around. I
yeah.
just cannot wrap that mind around.
Yeah, and so like that was always the motivation was even on it's still my motivation on on the, client side and the people that I work with in the CPA business is that financial education piece, but it's not just let's talk about the tax piece. It's let's look at the holistic approach. And so, are we talking about at wanting to set up whether it's having, life insurance for for yourself and your children. Do you want to have retirement accounts? And those retirement accounts, do you want to invest in the market, or do you want to self-direct it and choose what you want to invest it in? And it's not directing people in any specific way, but have those full conversations and say, these are your options. I'm not a CFA, right? I'm not a financial advisor,
Right.
so I can talk about what's out there, but
Sure.
then let's get you to talk to the people who are experts in those fields, to be able to do it. But here's the tax impact from all the things that we're doing, and so why, for me, I love working with real estate investors is because I've seen what real estate, like long-term investment
Yeah.
in real estate, can do, and be able to talk about that experience and how it allowed me at 39 to walk away from the W-2 world based off of what I had done.
Sure.
I lucking into buying real estate when I was younger, just because I didn't want to rent. And I had a friend who had that's who I was renting from at first, was a friend who had come back from the army, or right out of high school. So my best friend was already roommates with him. And when I moved back after school, they had an open bedroom, and basically me and my best friend got kicked out when he got engaged. Right? You don't. Yeah, she was moving in. She didn't want two guys living, and so me and him started to look for apartments. And I was like, well, I had two other friends coming back from college. They'd been another year in school. I was like, why don't I just do what he did? Like, right?
Yeah.
I'm gonna buy a house and I'll rent out the rooms, and as long as my mortgage is paid, I'm living for free. But
Right.
it wasn't the thought of make money off of this or anything. But I was like, if I can collect enough money in rent to pay my own mortgage, let's do it. And so I was
that all the time.
23
to my
and bought
younger clients that they come to me, they want to buy a single family home, and they're not engaged, they're not married, they don't have kids.
Yeah.
And I'm like, why? And they just think that's what they have to do.
Mhm.
And then I show them the numbers of buying a double. I said, do it even if you just buy this one.
Yeah.
Buy it for your first. You can put
Yep.
5% down,
Yeah.
owner occupy it, and in a year or two you want to move out and go buy a single family home. Use the profit from that to help fund your next.
Mhm.
And some people get it and they love it, and then other people are just like, yeah, whatever, that's not for me.
So I found a place in Kenmore at 23 that we were going to have 4 23-year-olds with a big above ground pool and a giant garage.
Nice.
that were like, hey, we can, it was like a party house when we were just out of college, right? And then that's like the journey
good old
kind of
days.
the journey
No
kind
responsibility, not giving a shit about anything,
Yeah.
staying up late.
Yeah. And so that real estate journey kind of expanded from there, just by lucking into it. When I moved to Columbus for the work with the Blue Jackets, obviously I rented out that place. I was like, oh, when I'm not here, it makes money.
Yeah.
And then when I moved back home from Columbus, I did kind of the same thing. I purchased an upper lower, lived in the lower with a friend of mine, rented out the upper, and again with the intention of, I'm just going to live here for free.
Yeah.
And
You still own
and
that
built
one in
it that way.
Kenmore?
I do. Yeah.
How long ago did you buy it?
2007. So
What'd you pay for it? Like
89.
89.
Yeah.
What does he think it's worth today?
I think it's 250 to 275.
That's
say
incredible.
for the double. Actually, the one side I fully renovated. The one side.
Do you own it free and
about
clear,
4 or 5.
or?
Yeah. So I ultimately ended up, and that's kind of what allowed me to walk away in 2022, is that most of my rentals had gotten to being owned free and clear. Was able to go to the bank,
Yeah.
get a blanket line of credit, basically on all the rentals. They appraised it. I was able to get a line of credit on it, and then that's actually what I used to do my private investing.
That's awesome.
So basically the equity that had been paid up over time from owning the properties,
Which is brilliant. You're
I
paying
then used
4, 5, 6%.
Yep.
You're farming it out for 10, 12, 15%.
Yep.
And
you make the
difference,
spread on it.
Yep. That's great. And for me, I'm doing something similar. I'm not lending yet.
Yep.
Yet.
Yes.
Right? I'm still building my portfolio. So I'm literally got I'm closing on 3 refinances on Friday. What's today? Thursday. On Friday, which is going to, I pay back my investors, and I'm putting 250 grand in my pocket. And by in my pocket, I'm going out and buying more real estate so that I can fix it up and rent it out and then refinance it and keep that snowball rolling. And eventually I will get to a point where I'm done buying. I'm going to use the equity in my property to lend out at 10, 12, 15%, whatever that is, and use my money to make money.
Yeah.
Right.
And that's like, that was always when I was, building up the portfolio, that was always my forward looking is, all right, I'm going to pull the equity out, right? Either a cash out refi or a line of credit or whatever it was. And then that's my down payment to do more properties. As you know, right, buying something that cash flowed or made sense in this area over the last couple of years has been a little bit more difficult.
It's
So
very difficult.
it's just a lot of effort, right? So I got a little exhausted of, hey, let's go see 8 houses this weekend, put an offer on 2 of them, maybe win it. Yeah. And it's just like, you're putting in all this time where I'm like, all right, if I can invest it here and somebody's going to pay me 15% for doing it,
boom,
I'm going to do that.
It's a guarantee. You know what's coming at the end, backed by the real estate.
But now that the monies, those investments are starting to come back, I do plan on expanding the portfolio moving forward. The new girlfriend in life, that she's also an investor. We've kind of remotivated each other that, hey, we want to build our portfolios to not only for her daughter and nephews, but for the idea of, like, we want to teach them entrepreneurial spirit, right, as well, do that. But while the 9 units that I have, it was perfect for me to live off of and do that. Now, if there's 5 people that I'm going to be responsible for,
the ratio is a little bit different.
I'm going to have to increase the portfolio, but I also want to have, like, I always look forward I'd love to leave my niece some properties, but I don't think she's going to want them at that point. But now, like, I have people in my life, right, that I leave property to be able to leave whatever wealth that gets built.
I tell my wife all the time, my intention is to really, unless I need to, sell. I'm going to hold until I can hold no longer, right? But with that being said, whether it's 50, 55, or 60, I'm going to pull the equity out of that, live off of that, live a great life until I die. And my daughter, or who's ever left over, my kids, is going to be handed a portfolio that is going to be leveraged, and they'll probably own, I don't know, right now I own 20 some houses, 40 some units. Whatever the number is, they're going to have some equity in it. Like, who's going to bitch if they get 20 or 25% or 50% equity in the property? But I need to, that's my business. Like, I need to live off that.
$10 million portfolio, right? Like 20-25% of that is still
100%.
It's pretty nice.
Oh, we owe 75% on a $10 million portfolio. What does that mean? You got $2.5 million in
and now that the turn
equity.
tax code that just was approved, that you can hand over $15 million in your estate to your heirs and none of it gets taxed. And that number is going to keep going up from there, because it's going to be indexed for inflation, right? So that number that you can leave, like, if the problem is that you're passing them more than $15 million, that they the amount over the 15 that they have to pay tax on, it's not anything that I'd ever complain about.
Sure.
Right. So
again, I'm hoping that when my kid turns 18, she sees the light. I help her get her rental property. Right. And then it's, one of the best financial moves I ever made was buying a duplex that my dad had owned. He wanted to sell it. I was living in it in college, and I said, hey, please don't sell this. I started my business. As soon as I can afford a mortgage, name your price. I'll buy it from you. It was in Amherst.
Okay.
Still own it to this day. I've owned it for 13 years myself, but for those 4 or 5 years that I started my business and I couldn't get a mortgage, I told my dad, I will do the updates. I will take care of the tenants, the maintenance, and you will just get a check every month, right? Whatever the rents are, I will send you the check, but I'll take care of you will not hear from tenants. And I kept my word. And he sold me this property for $170,000, and we did an FHA and, concessions, and I got into it for next to nothing, right? And at the time, I think rents were around like $700-800 for a 3-bedroom duplex in Amherst. I get $2,000 and $2,200 a month. It's worth $450-500. I owe $100 on it. Somebody else has been paying my mortgage, i.e., my tenants. I owe $100,000 at 3%. It's like when I saw what that did for me, even 7 years ago when I started buying more, that was the catalyst for it. I was living there. I had roommates. There
Hmm.
was tenants next
Yep.
door. I'm living in a 3-bedroom duplex with a Viper in the garage in Amherst.
Hmm.
Like life is good.
Yeah.
Like it was just an easy way of life.
Yeah.
And that now the profit that I get from that pays for my mortgage on
Hmm.
my single family
Yep.
house. And that frees me up to go buy more things,
Yeah.
right? Like rental properties or other investments.
Yeah.
So it's just such real estate. I'm drinking the Kool-Aid and I have been since I started
Hmm.
investing. Um, you know, I haven't seen the downturn or the negative of it
Yeah.
yet, other than shit tenants that you have to deal with,
Yeah.
right? And
Yeah.
evict and trash the place. But all in all, it's 90% good, 10% bad, or whatever,
And
whatever ratio you
it's one
want.
of those things that even if it is a downturn in the market, right? That if you're cash flowing,
Hmm.
you can
You're not going
you
to
can
lose
manage.
because you're
Yeah.
not going to sell,
Yeah. And that's the only way
right?
that you're
It's like
going
the
to
stock market takes
lose.
a
Yeah.
crash. Well, you haven't lost anything,
Hmm.
right?
Yep.
Because you haven't sold.
Yeah.
If you sell, you're gone.
Yeah.
It's gone.
Yep. And for me, like it's just, and even the private investing that I do, when I like, that's been a lot of sitting down with Ashley and talking about, hey, like this is what the returns are over here. But I always, when I give presentations and talk about real estate as the CPA side of things, like everybody just focuses on that cash flow piece.
Hmm.
But there's always the 4 quadrants, right? That you make money in your, as a real estate investor. And so cash flow is one of them. But when you have, the appreciation, the tax benefits of being able to take
Hmm.
depreciation, and then just your tenant paying down
Mortgage.
or
Yep.
the mortgage
Yep.
so that you get the equity. Like when you add the rate of return on those 4 together, if you're buying right, that number should probably be between 25 and 40% annually,
Hmm.
based off of like
Hmm.
the 20% down, idea, because your return is against that 20%. It's not on the purchase price of the house;
Sure.
it's what actually came out of
Yep.
your pocket. And when you add all those things up, like it's yes, 2 of those you don't get to tap into until later, right?
Hmm.
Until you actually access the
Yeah.
equity, but when you're looking at your return, what else, that's out there are you getting that kind of return, unless you bought Bitcoin, right? At
Right.
super cheap, or you did whatever, but there's very little that you're seeing that
So for
return,
me,
and the risk is
with
minimal.
the real
Yep.
estate, right? Very early on, I was buying in Niagara Falls and Lockport. I could buy houses cheap. I
Mhm.
could get decent rents. The barrier of entry was much easier, and the cash flow was incredible, right? But I didn't see a lot of appreciation.
Yeah.
So now that I'm seasoned a little, I'm 7 years in, my strategy has changed. I still have those properties in
Yep.
Niagara Falls and Lockport that cash flow very well for me,
Hmm.
right? I know what they are, I know what they do. Perfect. Now my strategy's changed a little to diversify my portfolio.
Yep.
And I bought a duplex in Williamsville. I own that one in Amherst. I'm looking at larger properties, better neighborhoods that aren't going to cash flow very well.
Yep.
But the
Yes.
appreciation,
Yeah.
because of what they are
Hmm.
in the neighborhood, just like North Buffalo properties that 5, 6, 7 years ago were $1.50, $1.25, are now $3.50.
Yeah.
Right? Better neighborhoods,
Yep.
more appreciation, less cash flow.
Yeah, and that's the choices that, right, as we talked about,
Yeah.
kind of full circle back to the CPA thing, is those are the pieces that as you're planning, as you're getting forward, like I have many clients who are like, all right, like I have the cash flows now, like
Hmm.
I'm making the decisions of maybe do we 1031 exchange out of
Hmm.
some of these properties to level up, right? Like, and that's the great thing is yes, one of the great things about the 1031 exchange is your tax deferral, but the best part of it for me is that you can take that and you level up, right?
Right.
Like you're going from, you can take a $200,000 property, sell it, and then that can become your proceeds to 4x, right?
Hmm.
If you're free and clear on that property, that becomes your down payment on the next property.
Yeah.
And 20% rule, right? 200,000 can be 800,000 to $1 million
Sure.
property. That then you're kicking the tax can down the road, but you're also increasing more depreciable basis, right? But you're getting to a point that in the family planning or the wealth planning, you now don't have this $200,000 house. You have this $1 million house
Yeah.
that is mortgages, be those same things we talked about. Mortgages being paid down, the appreciation on it. And so when you get to that point in life, you have, larger properties, more,
and for the most
more
part, it's a
value. Yep.
long-term play.
Yep.
Like you're planting the seeds, and I'm seeing a lot of fruits of my labor of seeds that I planted 7 years ago.
Yeah.
And now I'm really seeing the benefits,
Mhm.
right? Um,
It's
when
my
I say-
first two properties were 2007 and 2010, and I didn't really until I walking away 2022, right? There's 12 and 15 years from my first two purchases before they it really came to a head of what the exponential impact of that was. But then I always call it the hockey stick, right? Because it's slow. You talk about the cash flow is there, but that's what you're seeing,
yeah,
and
it's
you're
a
like,
slow burn,
all right,
and then all of a sudden,
and then you're just, this all came together, and then when you can compound that, it takes off.
So a funny story, or I don't know if it's funny, but a story that I often tell is, when I first started my video game stores, I was using my parents' accountant, right,
Mhm.
to
Yeah.
tax file, right, to file my taxes, and it was a couple, I don't know how many hundreds of dollars, but
Yeah.
I went from this small mom and pop store to 6 locations, doing $3 million a year in sales. I had sales tax, and I had, all the things that went along with
Yeah.
this. And I kept asking my business friends, "Hey, who does your taxes?" And everybody sort of had the same answer of like, they're different people, but there's this gray area of what they will write off, what they won't write off, what's legal, what's not legal, and why some guys are more lenient, or some guys
Yeah.
will dance that line. And I was watching something online, and my question is like, how do you know that you have a good tax preparer, a CPA, right?
Yeah.
How do you know they're good? And I'm like, I don't know. I've never been audited. Like, how
Yeah.
do I know?
Yeah.
Like, I may think they're doing the right thing,
Mhm.
but I don't know. And one of the things that I was reading up on, they were like, well, call your CPA and say, hey, John, if I get audited, what happens?
Yeah.
And so I did that. Called him. I said, hey, just out of curiosity, I'm very new to this. I'm 25 years old. I'm an entrepreneur.
Yeah.
Like, this is all no financial literacy coming through high school and college when it comes to taxes.
Yeah.
And I said, what if we get audited? Which is a fear, right?
Yeah.
Like,
I get that question from my clients all the time.
Yeah.
Am I going to go to jail if I get audited? This, that, and but
and he was so casual about it. He was just like, oh, we'll just deal with it when it comes. I said, no. I want to know, like, do you take control of the situation? Like, are you going to bat for me? And he's like, I could definitely help. And I was like, what do you mean you could definitely help? Like, you're not instilling confidence in me. I tell you, I fired him that day.
Yeah.
I didn't look back. I immediately was like, yeah, I want the guy that says, Kevin, he's like, I know what we're doing. I know what we've planned. We have a reason for everything we've done.
Yep.
And if you get audited, I will go to bat for you, and we will show them who, what, where, when, why, how, and you should have no problems. And that's what I was looking for.
Yeah. And
right?
that's the way it should be. Is it's the time headache of having to put together the documentation and do
I
all
want to
that.
sleep at night.
Yeah.
I don't need you like he just hesitated.
Yeah.
Like, oh, well, no, this is.
And that's I always tell my clients when they ask me that same question is well, first, the only reason we'd ever have to worry about an audit and you going to jail and all of this is if we're doing things we know we shouldn't.
Sure.
Right. And that's the people who get sent to jail are those who are intentionally committing tax fraud and doing that. And I have clients who have asked me to do things that I haven't felt comfortable with. And I'm like, I'm maybe not the best match for you because I'm not,
Sure.
I don't have any support of what you're asking me to put on your tax return.
Right.
So, I'm not going to do that, but I will be very aggressive. Right. And do that. But like you said, then I will be in your corner if the IRS sends you the state, right, sends you an audit notice.
I know that I'm signing off on it, but I also know that I've entrusted and paid somebody to guide me as a professional.
Yeah.
Right.
And that's the thing that comes with that planning and advising and that through the year, because the guy who is just taking all your documents, guy or girl, right,
Yeah.
that's taking all your documents in March and putting into a tax return and returning your documents, they know nothing on if what you've put on there is correct, if it's
Sure.
real. Like
Yep.
they don't have the conversation with you. They can be putting a whole bunch of, like you said, fraud on a tax return and doing that. But if we've had the conversations all year of like, yes, these are the things that you can take, track this, do this. You haven't been doing this, but you should implement it in your business because it's going to save you that. When you give me your documents, I'm going to be like, oh yeah, these are the things that we talked about.
Right.
It goes in there and I can do that and feel comfortable. But the person who's just taking your document, when the IRS comes, that's why he's saying, the original guy is like, oh, I can help you, is because he doesn't actually know what's going on in your business. So
Sure.
like, how is he going to be able to
Very fair.
fight
And
it for you?
I didn't
So
look at it like that,
Yeah.
right? I looked at it like, hey, well, I gave you all the numbers and you put it in.
Yeah.
But if I get audited, you're hesitating whether or not like you're going to help me. Like there wasn't a strong enough answer. And
Yeah.
and listen, my taxes versus like my wife who's a W-2, that like they take what they take and you just got to deal with it,
Yeah.
sort of, right? Or like an entrepreneurial, a business owner, it's complete. Real estate owner, there's a lot more benefits to owning corporations and real estate and taking advantage of those. Sometimes every once in a while, like whether I refinance a big mortgage personally or whatever I buy, I've got a great credit score, well over 800. My wife and I do very well, but then they're scrutinizing my real estate write-offs, right? And I'm like, people, that's one of the why a reason I own real estate is to take advantage of the tax benefits. But then it doesn't show as well on my tax forms because of the income. And depending on what you're buying or a loan you're going after, they weigh it differently, right? They're going to weigh your write-offs when you're buying a house differently than when you're buying a car.
Oh yeah. And I mean, we right. I just bought a new house this summer, and we went through that those hoops, right? Because
they treat you like a criminal.
I get all that the interest income off those private investments that I make, but the bank said they couldn't take that because the notes that I have aren't 36 months or more in advance. So it was 50% of the income that I pay tax on.
Sure.
That the bank said they couldn't qualify the income to qualify for a house. So
it's
there's
wild
so much,
to me how the bank will hand you a $250,000 in student loan debt.
Yep.
But if I want $10,000 to start a business, like no fucking way, right?
Yeah.
Like,
and I've even worked, and that's one of the things, I've worked with a client who had a painting business, right? And he's like, I'm buying a house this year. I need my income to be this amount for me to qualify for that. So we, while he was entitled to certain write-offs, we didn't take all of them so that his income could be where it needed to be to qualify. And it's to going
stay bankable.
Matching up with real estate and being an entrepreneur or a small business owner is tough because you get viewed at differently, and it's weird because, right, as a W-2, I could walk into a business tomorrow, my employer, and get fired, and not have a job. So I have zero control over that. Where if I run my own business, right, I have full control, mostly, right, if I'm going to be making money continuously or moving forward. But a bank will see that W-2 job is like gold compared
multiple
to
times over my life. My
compared to you running your own business for multiple
I've gone
years
for a loan, and what I've done, I get denied for the loan because I'm not showing enough income. And I'm like, fuck it, I'll pay it cash for it, and then I'll refinance it. Like, I have the ability to do that, which is great, right? Not everybody does, but you get to a point in your entrepreneur career when you're successful, you can pull some strings like that. It's just like,
Yeah, and so like you go back to that question you had for your CPA of like, how do you know if you have the good one? And it's you're asking questions specific to your business, right? Like, how does this play into, do you have other clients who do the same thing that I do as a business? Like, what has your experience been there? But then, ask them about that gray area. Like, how do you approach that? How do you do it? And so the way that I always do that with my clients is like, as long as I can find some sort of support, whether it be a legal case or just a part of the code that supports the deduction we're taking. If you get audited, if I have that support, and like you said, as I'm supposed to be in your corner, I present that support. Yes, the IRS doesn't have to agree with us. And so you may end up having to pay the difference in tax when they say, no, it probably shouldn't have been a write-off, but they're not going to you're not going to hit with those severe penalties or, the jail that people worry about.
Right.
As long as we have a reason to take it, I'm always okay with, hey, let's try it. And an audit itself is, the IRS has their algorithms, right? That they change every year. Sometimes they'll focus on certain industries and pick a lot more to audit in certain industries. If you're, a small business owner and they want to go after, medical that year, or, cosmetology or whatever it is, that they're going to be like, all right, those are the ones that we kind of want to audit or focus on. But for the most part, it's a lot of luck of the draw.
Right.
And it doesn't make sense for the IRS to go after people that won't garner a severe increase in tax revenue.
Sure.
Right. So that's why when you look at the audit rates, it's oddly enough, it's kind of the lower income doesn't get audited very much. And like even the high income doesn't get audited as much because IRS knows they probably have a team of lawyers, a team of good accountants.
Sure.
Are we going to, the time that we're going to have to put into it, and it's the people that fall into the middle that get hit the most, because they're either just kind of coming into money or may not all the rules and where there may be the most meat on the bone for audits that they do. So, and even entity structure is a huge driver on audit rates and different things like that. So, and IRS puts those rates out every year on like, hey, these are where the audits were. But when funding is cut on it, there's going to be less audits because there's going to be less agents to do it. Doesn't mean, hey, go and do whatever. But technically, you can put anything you want on your tax return.
You just got to answer for it when the man comes knocking.
And like so many, I know there's many people who would be like, I've been doing this for years. I've never been audited, and then like that doesn't mean that it's right. It just means you haven't been caught yet.
Yeah.
And so because if they do, they can go back years and try to pull all that out. So I've only had well, if this is real wood, one audit experience that I've had to go through with a client, and we were able to provide all the support on it. And it's the headache because you're spending the week with them or sending documents back and forth or whatever it is. But that's the only one I've come across. But we'll see if now as business expands, if that's going to be something that comes.
So as far as business expanding, are you taking on new clients? Who are you looking to work with? And, so why don't we wrap this up and you can kind of talk about if you are taking on clients, provide us with all your contact information and we'll wrap it up.
Yeah. So definitely taking on new clients as I expand the business moving forward here. Obviously my niche or focus is real estate investors, right? People who are involved in real estate and small business owners, right? But those are those who need the most planning and advising as it comes anyway, because that's the spots.
I get asked all the time from entrepreneurs, and I've handed your number out more times than I can probably count.
Yeah, there's been probably 3 or 4 already this summer that I've had conversations with that now we're going to continue to
because it's a need, forward. Right? Like once you start owning real estate, it completely changes the game, right?
And like, because I even say the people who have the W-2 and that's all you have, and maybe a couple stock investments is like use TurboTax, right? You could pay me to do it, but I'm not going to come up with anything different than TurboTax is going to.
Real quick story. So before my wife and I were married, again, my taxes were my taxes, and she was a W-2, and same thing. She would use TurboTax or whatever online service, right? It wasn't groundbreaking by any means. Well, just last year, she gets a tax bill for some outrageous number that she didn't file, like her 2017 taxes. And she's like, I absolutely did. So now we're scrambling. And it was before we got married. So we weren't using my tax preparer at the time. She was, we found out she was using TurboTax, and she went back into her email. She's like, look, I have the proof. It was submitted. And she found another email. So she had submitted her taxes on Monday when they were due. On Tuesday, she jumped on a flight to Paris for 2 weeks with her family. Yeah. And the payment got kicked back.
Okay.
And it went to one of her spam folders or something. She didn't see it. Never thought twice about it. Didn't pay attention that the money didn't come out of her account. and it got resolved.
Yeah.
But she had to pay some interest and some, but
Yeah.
so
And the thing is, like, that's also just quick touch on that. Like a lot of people get that first penalty thing, like, or you file late
yeah,
or something happens. 90% of the time, if this is your first time ever either being late or
sure,
having penalties and interest, you can usually call the IRS, ask them for a one-time waiver.
yep,
Because if you've always been on time and never had a problem, they'll usually say,
yep,
okay, for your first time, it's kind of like a late fee on your
yeah,
credit card,
yeah,
right?
yeah. Beg for
IRS is
forgiveness.
is pretty willing on that, right? After you make a habit, they're going to be like, no, we're going to pile on
Right.
that. So I always say, if you ever get a letter from the IRS or the state, and that's your first time, like having penalties or interest, try to call for the waiver on it.
We
And
sent a
yep,
she sent a
yeah,
letter in, and I don't think we
yeah,
ever heard back.
yeah.
So she paid it. She
Hmm.
just but also included
Yeah,
a letter like stating like, hey, I apologize for this mistake. This is
hmm,
what happened.
yeah,
It's not a habit, so it is
yeah.
what it is.
So the basic W-2, like I'll happily prepare that tax return for you. If that's you, or you want to make sure that you're having a professional who's doing that. But like I said, small business and real estate investors, and real estate investors of any size. I have some that just have their first duplex, right?
Hmm.
Or I have clients that have 50, 60 units as well, that they own themselves, and then even have some clients that are, own significantly more, but they're part of
Yeah.
a syndication,
Right. Right.
and I have 1% ownership in these 1,000 units,
Yeah.
but
Well, and I've had
yeah,
a couple friends recently that have worked the W
yeah,
two. They do very well for
hmm,
themselves, and they're like, I'm getting crushed
yes,
on taxes, and I'm like, buy some real estate,
yeah.
right?
Yep, and that's the next move, right? And that's to have the conversations on where you can see how that works into things, how even Joe, who you referred me to,
Yep.
or referred to me recently, that's we're talking about, like, how can we have his wife's entrepreneurship, or even looking at a real estate professional status,
Mm-hmm.
trying to attain that to, like you said, offset the W-2 income.
Yep.
Because there's not many ways to offset W-2 income,
Right.
but that real estate is one of the few,
Well,
that
and you
if you
need somebody to
do it
guide
right.
what you do. You don't know what
Yeah.
you don't know. So
Yeah.
to have that guidance,
And you have to do it right, because in his situation, right, he had losses in his real estate, but he made too much to be able to write it off.
sure.
And there's only certain status that you can have, that you can actually take the losses from real estate and offset it to
Uh-huh.
W-2, and typically they're tough to check. But if it's either a short-term rental or real estate professional status, which are like the two ways, you can really use that.
Mm-hmm.
And with the new bonus depreciation going back to 100%, there's now significant opportunity to use real estate to offset W-2. So that's the focus there, right? Real estate, that any number of units, if that's your and the intentions, even if it's just to hold it or to expand, right? Those I like to have those conversations and talk with real estate investors.
But for
And then
the
yeah,
conversation that I've had,
yeah,
Joe being one of them, you
yep,
just brought him up. Here's the thing: if you've got to pay somebody like yourself $2,000-3,000 a year, I don't know what the number is. I'm just
yeah,
using that $2,000-3,000 a year to prepare and to keep you on track, but it saves you 20.
hmm,
What right? You don't want to spend $3,000. They only save you $1,000. Well, that's stupid,
yeah.
right? But there's a cost of doing business and a cost of saving money. And listen, that's a fair trade. If I spend 3 to save 6,
Well,
it's net. I'm
and for
positive
me, I
3,
always
right?
state, like, I have my hourly rate,
Yeah,
right? That I'll sit down with anybody with, and
sure.
I always say that if I can't have you leave that table, having at least gotten 3 to 5x in value of what my hourly rate is on what you're either going to be able to save in taxes, or
Yeah.
the value that's going to help, like, your next
And you
decision,
can show
then
them,
yeah,
right?
then
Like it's right there on your
then I
return.
don't deserve to invoice you at
Yeah,
the end of
that's
this,
fair.
right? Like, so if you've gotten zero value, then I haven't done my job, because if we sit down and talk for an hour, I should be able to find
Makes
at
complete
least
sense.
2 things that you're not doing in your business that can help on taxes,
Hmm.
or at least a plan moving forward. So, and that's why I look the small business and real estate. There's so much planning that can go into it. There's so many things that are missed. Like, the tax code says, we want you to pay your fair share in tax, but they want you to pay the minimum amount of tax that
Sure.
you should be paying. They'll happily take more if you're willing to
course.
pay more, but the code is written. There's like 100 pages that is defining income. And then the whole rest of the thousands of pages are deductions and write-offs and credits and things to lower your income.
Right.
And so that's why they entice, like, right, real estate and small business are the most amount of write-offs because government wants you to start your own business. They want you to buy real estate. And so they motivate you with all of the deductions and
Sure.
credits and different things that they give you for doing that. And so anybody can go and, you can be a YouTube guru and think you're learning all these tax secrets and going through, and while half of it's probably right, half of it's probably wrong.
That's got to be so annoying.
yeah.
How many calls a week do you get? Hey, I saw this on Facebook or I saw this on Instagram.
Yeah.
And you're like, no,
Yeah.
you can't do that.
I get, like, it'll just be, like just random emails and they'll send me a link of like,
Yeah.
I want to do this. And I was like, you can't do that. Like, it's just not something, or even the conversation that you called me just even last week of like, hey, can I write off a boat? And so like, right, we have the conversation and we're like, that's the very, far end of gray. I was like, you'd have to check all these boxes
Sure.
to make it possible. But yeah, but those are conversations that I'm still happy to have with any of my clients. Right. And through the year, like you reach out about those things or, hey, I'm thinking about doing this. And the biggest thing is if even if it's just, hey, I'm always say, if you have a CPA you're happy with or a tax preparer you're happy with, great. I'm never going to say, leave them, come work with me. I'm so much better if you're happy with what it is. But if you're not, right, just have the conversation with me, or if it's a review or whatever it is, let's talk and say, and if I say everything looks pretty good, like don't do that. But if your tax preparer isn't after, and mine's going to be coming out this week. Obviously, that with my dog and certain things, I've been a little delayed the last couple weeks, but I'm going to have an email going out to all my clients this week that says, here's a new tax code. Here are all the changes that might be relevant to you. And if I know these all fit at least one of my clients, let's have the conversations on how this
And honestly,
fixes
as an
it.
entrepreneur,
Yeah.
like I need that,
Yeah.
right? Like I need people in my,
And if
I
your
need
person
the best
isn't-
attorney and the best tax preparer
Yeah.
and the, right down the list,
Mhm.
right? Of people supporting me because I
Yeah.
I just can't pay enough attention to that part of it, right?
You're best at what your
Yeah.
business is, right? And that's why typically right on the backside, the bookkeeping, the accounting is usually the last thing, because small business owners, unless that's their business,
I hate paperwork.
are outgoing, making money and doing
Yeah.
the thing that they're best at, and that's typically the last thing. And so, right, that's usually the mess. But even those, I like working with new business owners because we can start off on the right foot rather than getting behind the eight ball. And it's easy to track if you know the resources and the way to do it. It's when you get too far out in the future and try to backtrack is where it gets messy and tough. But yeah, so if like your CPA or tax preparer isn't sending you like those correspondence or willing to work with you through the year or things like that, that's maybe where it's the time to say, I'll shop around or have a conversation with others.
You got to be able to realize that
yeah.
if you've outgrown somebody that you're working with, no matter what field it is, right?
Yeah.
Like
my industry is weird because there's like just the last 2 years, there was a report released that like 25% of the workforce in accounting, right, has left, right? They've either aged out, decided they don't want to do it anymore.
Okay.
The tax prep just becomes so overwhelming. They're so busy that they get burnt
I
out.
can see that.
So there's a lot of people also that their accountant has just stopped doing the work. And so they're looking too. So even if it's not with me, these are just questions to ask and do that there. So I do in every state. I can prepare taxes for every state. So I'd say half of my clients or more actually are outside of New York State.
Oh, wow.
So I file tax returns throughout different areas. California is the one that you kind of have to jump through some hoops to be able to file there. Yeah. So New York and California, right, got to make everything as difficult as possible. But as a New York CPA, you have reciprocity pretty much everywhere. Most states, Hawaii gets a little difficult too. But yeah, so I'm taking on new clients right now. I continue to work through finding new technologies, making things more efficient. Introduced portals last year for other clients to do their time saving measures, and
Nice.
so that it's allowing me to be able to help out more clients, but still, kind of the same amount of time applied to it. So it's the efficient now that I've committed to doing it, right? It's finding the efficiencies and
Right.
doing that. And there's the ability to certainly, double, triple business even coming forward in the next year from where we're at. So
Love
yeah.
it. Well, listen, I'm extremely glad you came on. It was knowledgeable for me. I hope it's for everybody else. What's the best way to get a hold of you?
Yeah. So email, phone, you just give out phone number, or
Yeah,
is that
yeah, yeah.
right?
If you
Yeah,
want
yeah,
to,
that's
listen,
fine.
for the hundreds
Yeah.
of thousands of people
Yeah,
listening
yes.
out there, here's Zach's phone number.
No, so that probably the easiest way is email. It's just my name, ZACH.Newberry, NEWBERRY at yahoo.com is the email that I respond to the most that I have there. Once I have the fully fledged website that will be updated, but that's the best way. And then or by phone 716-807-1252 is the number. Usually if it's a number I don't recognize, it'll go to voicemail. Just leave me a message and I'll get back to it. I try to have as long as I'm in town and not I have a 48 business hour response rule. Is that typically if I get an email or phone call for clients, non-clients, that if I have that, I'll at least get a response to you of some sort, even if it's, hey, I got to research this. I'll get back to you another time in 48 business hours just to give you an update. So you're not
Well,
blind.
appreciate all
Yep.
the knowledge. And that's our latest show of Let's Know Buffalo. Thank you.
Thank you.